Last week, we witnessed something that almost never happens in financial history. Gold and silver experienced some of the largest nominal price drops ever recorded. It shocked investors across the world. What made it even more surprising is that at the same time prices were falling, demand for physical metal was reportedly exploding behind the scenes. The CEO of one of the largest private mints in the world stated that the incoming demand for physical gold and silver is breathtaking, and that he hasn't seen buying pressure like this since the global lockdown period. Some traders even predicted that physical silver inventories at major dealers could completely sell out within days. On top of that, silver prices in China were trading significantly higher than in the United States, creating a noticeable price gap between markets. Silver recently saw a massive swing. It had previously climbed to extremely high levels before plunging sharply, only to rebound again shortly after. In dollar terms, the single-day drop was one of the largest ever. Historically, the only comparable event in percentage terms dates back to 1980 during the Hunt Brothers silver squeeze, when silver lost about half its value in a single day. While that drop was larger percentage-wise, the modern drop felt bigger because of the actual dollar amount erased so quickly. Another point that caught attention was the lack of trading halts or circuit breakers during the steep decline. Normally, exchanges have safeguards that pause trading when markets move too fast in one direction. Some analysts and traders questioned why those mechanisms did not appear to trigger during such extreme volatility. This fueled debates online about market structure, fairness, and whether large institutional players were being forced to liquidate positions rapidly. Despite the dramatic sell-off, silver still remains higher overall compared to where it started earlier in the year. Many investors believe the long-term upward trend is still intact and view the drop as a correction rather than a collapse. In fact, some buyers treated the dip as an opportunity to accumulate more metal at lower prices. Analysts continue to warn against emotional panic selling, suggesting that volatility is normal in commodities and that sharp corrections often happen after strong rallies. Gold also experienced a notable decline, while copper fell far less in comparison. This has shifted attention toward copper as a metal with potentially strong future demand. Experts argue that copper is essential to nearly every modern technology, from electric vehicles and renewable energy infrastructure to data centers, robotics, and semiconductor manufacturing. Some projections suggest that humanity may need to mine as much copper in the next few decades as it has mined throughout all of recorded history just to maintain global economic growth. There is also increasing discussion about domestic mining and manufacturing returning to the United States. Policies encouraging mineral independence and supply chain security have put additional focus on copper production. Supporters believe this could lead to long-term opportunities within the mining sector, especially for companies operating on U.S. soil with existing infrastructure already in place. Overall, the metals market is entering a period of extreme volatility mixed with intense demand. Premiums on physical products may rise if supply tightens, and price swings could continue as traders react to global economic signals. Whether gold, silver, and copper surge higher or experience more corrections, one thing is clear: the coming weeks are likely to be anything but boring. Investors and spectators alike are watching closely to see where the next major move will take these critical commodities. No matter where prices go next, the one constant in these markets is volatility. And volatility creates opportunity for those who stay informed and think long-term instead of reacting emotionally. Whether you're stacking physical metals, watching the charts, or simply learning how these markets move, knowledge is your greatest asset. This is the Silver Thesis, where we question the narrative, follow the data, and stay grounded in real assets and real strategy. If you found value in this breakdown, stick around, because the next move in the metals market could be the most important one yet.